A very good morning. I'm Bronwyn Nielsen. I'm your moderator for today's delivery of SpendTrend 2026. It's great to be here and also great to see so many familiar faces in the room. Certainly, as we've started 2026, we are in an uncertain world. We've got a very fragile geopolitical environment. We have volatile trading environments. We've got the fuel price hitting new record highs and then retreating. International travel in some destinations is becoming more difficult and not easier. So against this context and this backdrop of uncertainty, what does it mean for us here at home? And more importantly, what does it mean about how South Africans are actually spending their money? And perhaps an even more valuable point is to look at these current trends and ascertain how consumers are going to respond as they face even more uncertainty as it comes forward. So I think a key issue here is that the spend trend is about evidence. This is not about opinion. And that is a key marker of what today's event is all around. We've changed the format slightly. So instead of two presentations, long presentations, we're going to go into two short presentations from our principals, Laneshri Moodley from Visa South Africa and Hilton Kellner. Excuse me, I may have to look at another profession if I can't keep my voice going, and Hilton Kellner from Discovery. Those short presentations will then be followed by a moderated Q&A on stage, and then I will open to your questions as the media. So you're going to have time to really drill down in depth into some of those themes that you want to investigate further. This is the fourth collaboration between Discovery and Discovery Bank and Visa, and it is really about scale that is unusual in the South African context at the moment. The survey is 2.6 billion Visa net transactions, 2.6 billion Visa net transactions across 12 million credit cards. That data from 2021 to 2025. And that transactional data is then layered with Discovery Bank's depth and breadth of analysis. And you're moving from pure volume, sheer volume in terms of spend, to behavioral patterns. So that, for me, is one of the incredibly valuable assets that we're going to uncover today. There's also the second edition of an additional survey, and that is a consumer-based survey. It is 1,000 consumers, 1,000 respondents. They are all earning more than 100,000 Rand a year. And that's going to take you into their views on cash versus digital, how they manage subscriptions, experience fraud, how they are utilizing AI tools, and there's some groundbreaking themes in terms of how consumers are using AI to shape their spending patterns. We're also going to touch on online gambling, health-related spend, and these are in 4 segments, as you can see: high net worth individuals, everyday affluent, mass affluent, and mass. And it's across 7 cities. What is interesting, this is the what, the where, and the who. An additional point this year is in terms of when South Africans are spending and the events that are driving that spend. Black Friday is one of those events we know on the calendar, huge spike around that time. Sporting events, celebrations, long weekends, how is that going to drive spending patterns going forward? I'm going to pause here, and it is my pleasure to introduce Laneshri Moodley, who is the country head for Visa at South Africa, Eswatini, and Lesotho. Laneshri, stage is yours.
Thank you, Bronwyn. It is my absolute pleasure to be here today. As Bronwyn mentioned, this is the 4th edition of Spend Trends that we're doing in South Africa. And I really want to start by saying thank you to Hilton for the leadership and collaboration in really producing this market-leading thought leadership. I also want to say thank you to the Discovery and the Visa teams who have really worked hard to bring SpendTrends 26 to life. Visa operates in over 200 markets globally, which really gives us the unique ability to look at consumer behavior across multiple territories and give us a view from the different economic and social conditions that exist. What is really quite striking is that when you look at South Africa in the context of these global countries, for the segment that we are covering today as part of this report, South Africa is actually not lagging from a digital transformation perspective. If anything, we are leapfrogging on certain elements. So what I'd like to do over the next few minutes is really highlight 6 key trends from this year's report, and it's going to give you an idea of how consumers are spending, where they're investing, how they're protecting themselves, also increasingly using technology and AI in a very uncertain environment that we find ourselves in. So I'll get to the first trend. We've really seen digital become the first option that consumers are using. And this is largely driven by the fact that it's available, it's safe, and it's widely accessible. We do see consumers still using cash for certain use cases, for things like tipping, or whether there needs to be payments of taxi fares, etc. But when we look at the broadly consumers, if there are digital payments that are available, they are choosing to use it. If we look at digital wallets, it now accounts for 30% of all in-store transactions, which is a phenomenal growth that we've seen over the last 3 to 4 years. What the focus needs to be for us is to say, how do we now accelerate acceptance of these digital payments so that they are accepted everywhere? The next trend is cryptocurrency. What's interesting about this is that it's no longer an emerging trend. We actually see cryptocurrency as regular financial household behavior, really informing the financial portfolio mix that households are looking at. When you look at around mid-2025, we saw 7.8 million South African consumers that were actually using the large trading platforms. When you go a step further and you look at VisaNet data, what we're seeing is these purchases are no longer large and they're no longer irregular. We're seeing a lot more disciplined investment in cryptocurrency alongside your traditional assets like properties and shares, etc. So this trend is only going to accelerate. The third trend I want to talk about is streetonomics, perhaps one of my favorite trends for the year. We've also seen this trend emerge globally. And what this is saying to us is, even as consumers see the pressure of rising costs, there's still everyday treats that they are buying, so the discretionary spend on micro things is still there. You have some consumers that, irrespective of how costs are rising, are still buying the everyday coffee. They're still buying the occasional spa treatment. And when we look at this, and this is the South Africa data, but when we look at globally, we saw specifically for America, people buying things like Labubu. I think we all know about that craze that was on for a while, but the discretionary spend is certainly there. Where we're seeing the difference is that some of the spend, people are looking at it as, I deserve it, I've earned it, so I'm going to get it. Whereas other people who still want to treat themselves are being a bit more deliberate around when the treat happens. The fourth trend, and Bronwyn mentioned this, is this year we took a look at when people spend. So in an environment where we have a lot of uncertainty, predictability is really the anchor that consumers are using to make decisions. So we see things like celebration days, Valentine's Day, Mother's Day, Father's Day, events around key sporting events or cultural activities is where we see the largest spend being driven in South Africa. Again, one of the favorite stats I see from the report is on Valentine's Day, we have a 277% increase on floral sales. And then when you look at long weekends, the spend during that period of time is a lot longer. What Visa also released at the beginning of this year in January is we took a look at the B20 G20 event that South Africa hosted last year, and we saw that during the peak of the B20, G20, spend increased by 49%. A lot of it was international. And the interesting thing we saw was that the week preceding the G20 and B20, the spend was in Cape Town, and it was on personal card, but the week of the G20, the spend moved onto commercial cards, and it was happening in Johannesburg. So again, really highlighting the power of events to drive spend in a country. The next spend is on subscriptions. We've talked about this consistently through the previous SpendTrends reports. What we're starting to see are consumers being a lot more deliberate. So it's no longer about ownership. It's about how do I access value? And we're seeing more and more consumers starting to turn on and off subscriptions as and when they need it. They want the flexibility to upgrade. And then the biggest point here I want to make is we've seen AI grow in share of wallet to be the biggest share of the online subscription. Things like Perplexity, ChatGPT, etc. And then the last trend I want to share is on fraud. So as digital transactions increase, so too does fraud. And we always talk about the tools and the products and services we are investing in to protect the ecosystem. But one of the key points here is also tied back to the behavior of the consumers. So whilst we've seen digital fraud decrease, and again, it's due to the tools and the products and services that we're using, we're also seeing fraudsters really up their effort in terms of social engineering, really looking at, how do you get consumers to act with urgency and exploit their weaknesses. So I don't know about you, but I get many, many SMSs telling me, you've ordered this, and in order to release that delivery, you've got to pay a certain amount. You've just seen in 2 slides back, I talked about South Africa being event-driven. Black Friday is one of our biggest spend events. So if you're shopping during those periods and you don't take a moment to think, this is something that is fraudulent, it's very easy to actually click on that, provide your details, and you've been defrauded. But what is also quite encouraging is that we're seeing South African consumers starting to spot red flags a lot better. They're starting to become a lot more aware. But even perhaps better is that they're demanding safer authentication methods. So as I come to the end of these 6 trends, what I want to say is perhaps one of the most notable consumer stories for 2025 has been the shift we've seen in digital. What we're going to be watching very closely as a key theme going into 2026 is social engineering and the impact that has on fraud. Thank you very much. I'm going to hand back to Bronwyn.
Thanks so much. Certainly, if I look at my online subscriptions, AI is about 99.9% of my total subscription on a monthly basis at the moment. It is revolutionizing my work environment, and I'm sure it is doing the same for many of yours. We're going to delve into a number of those themes a little later in our discussion, but now for the next part of our FIRE presentation, we've got Hilton Kulner, the CEO of Discovery and Discovery Bank.
I'll sit. Thanks, Bronwyn, and thanks, Sineshri. And maybe just the outset to thank both the Discovery Bank and Visa teams for what is an incredible analysis of spending trends across South Africans. And then to you, the media, for joining us here this morning. Really appreciate the time. This is an incredible analysis for an actuary, in the sense that it's the biggest kind of quantitative analysis of how South Africans are spending that we can delve into as an organization, but more broadly as stakeholders in the system. This year, as Bronwyn said, it's supplemented not just with kind of the quantitative analysis that Visa and Discovery bring together, but the behavioral analysis, the qualitative analysis that we're then able to match back to the actual underlying trends through the consumer survey that's been undertaken. So at the outset, let me position kind of 5 quick trends that we've observed. The first being the highest level macro trend in the survey, in the analysis, and it's a positive one in a sense. For the first time in a couple of years, we've seen a a return to spending, particularly on a discretionary basis amongst South Africans, whereby the actual spend itself outpaced inflation by close to 1%, and that's really on the back of a decline in interest rates that we saw a full percentage point on average over the course of the year. So kind of a real macro tailwind in a sense that spurred on spending. And I think that's, it's something that we observed, and I think we felt anecdotally as consumers last year, the kind of the green shoots emerging in the economy. That said, I think we've observed it as a bank in terms of the way that clients are spending. They've been much more judicious in terms of taking advantage of the kind of the injection that a rate reduction provides, and we've seen it in a number of areas. The first is the way that clients are using rewards and the incentives that they have access to. They're kind of drawing down on them, and they're engaging much more in these programs. And it's not just about the kind of the incentive itself. It's about how you're using it to shop more smartly and be much more aware. And we see a strong correlation between clients that engage in their financial planning and their outcomes. And so the kind of the trend towards smarter spending is incredibly strong, and the increase in spend itself, outpacing inflation, is one of the kind of the headline findings at a macro level. At a micro level, and this is where it's really interesting for us in terms of the data that we're able to analyze in SpendTrend, we see 4 key trends in large areas coming through. The first is travel. We saw a significant rebound post-COVID into travel, and that's continued across all segments in the analysis this year. But what's interesting, and the kind of the qualitative analysis backs it up, in a sense, is that value for money has really become the kind of the central, most important factor in planning a trip, moving away from just vacation and rest to actually focusing on where you get the best deals as a consumer, and we expect that to continue. The kind of the travel trend itself is an incredibly complicated and complex one in the current geopolitical environment, which has seen mass disruption, and how people are dealing with that is a key trend that we see coming into 2026. The second trend at a micro level is really around the kind of an issue that has dominated societal conversations, and that is around sports betting and how it's reshaping the way that South Africans engage in terms of their entertainment, but also around sport itself as a kind of institution. As South Africans, we love our sport, and what sports betting has really enabled is kind of a much more engaged interaction with that. And the question then that obviously materializes is kind of what is entertainment versus what becomes unhealthy, and kind of we tried to delve into that through the survey. And we saw that 46% of South Africans who bet say that they're spending less online this year than they actually did last year. Several of them say that they budget, so about over 40%, 43% surveyed say that they actually budget and stick to it in terms of how they think about their sports betting. But what is quite an unbelievable stat is that effectively 75% of South Africans surveyed, the respondents, say that they engage in sports betting in some shape or form, which just underlies the kind of the take-up and the trend, and talks to I suppose, the conversation around how sports betting is marketed, how it's engaged with, and how we can encourage South Africans to be responsible in terms of how they actually manage their finances and able to engage in areas like sports betting at the same time. The third trend that we see, and from a health perspective, this is incredibly important and interesting, is the take-up of prescription weight management medicine, in particular GLP-1s, and how they're affecting people's health, not just kind of at a household level, but their finances, given the cost and the spend in this category. And we've seen it grow significantly. 14% of respondents say that somebody in their house is currently using a prescribed weight loss medication, particularly GLP-1s being the kind of the most common. It's 1 in 7 households surveyed. But what's interesting for us is kind of the way that people are thinking about how they budget for these costs and how they then manage the rest of their health. And you can see that 59% say that they're spending more on healthier foods. That's something that's really important to us. 48% are spending less on takeaways, 45% less on alcohol, and 38% spending less on groceries in total. So kind of the overall health becomes a key focus area for the family, and that's really important, and it talks to kind of a really important insight for retailers and other stakeholders in the healthcare system. And then the final micro trend, which Linesri touched on as well, is around AI and how it's influencing virtually every aspect of our lives. And Bronwyn's entire work is now AI-driven, but consumer spending more and more is almost entirely AI-driven as well. And 40% of South Africans surveyed use AI weekly for purchase decisions. So actually asking kind of for advice, and it manifests even more so in younger age demographics, 50% in the 18 to 30-year-old category. And the use of this is very interesting. 42% are using AI to effectively identify the most cost-effective option and effectively to shop on their behalf, almost kind of agentic shopping. But 35% use the AI actually to shop smarter and to shop more securely. So using the AI to avoid fraud and to avoid a risky purchase. And kind of it shows just how alive people are to these issues. That's something that we see, whereby in our data, we see our clients using our AI tools as well within Discovery Bank to identify fraudulent messages that they receive and to check them, and then to use AI more broadly for service, to ask questions. The kind of the asynchronous service of AI makes it more convenient. It's 24/7, gives brilliant kind of response rates to the client as they need it. And now we've seen an 85% reduction in fraud using AI technology at a per transaction level to be able to assist our clients to shop, to spend, and to pay digitally in particular much more securely. So the impact there is quite remarkable, and we're using AI really to support our clients in new and innovative ways. So kind of 4 micro trends that we see coming through very, very strongly around travel, around health, around sports betting, around AI, and all of it coming through ultimately in higher spend year on year. So really incredible insights that we're seeing coming through the survey, and really, I suppose, some encouraging signs and some really interesting observations.
Thank you, Hilton. And I see I'm going to have to increase that monthly spend now to help me in determining the best shopping from an AI perspective. They can assess the pricing and the trends. I really appreciate that side of things as well. When time is the most important aspect of our lives, AI is helping us do it a lot quicker. We're going to go into that moderated Q&A on stage. Just a couple of questions for Hilton and Linesri, and then I'm going to open to you in terms of your wanting to delve further into any key topics. One of the key themes, Hilton, is that relief arrived. We had 4 interest rate cuts. You referred to that in 2025. But South Africans responded moderately. Is that because they are bringing new discipline into their spending habits, or is it because they are scarred from 3 years of tough times?
I think it's probably a bit of both. I think that as South Africans, we're incredibly resilient, and what we see and observe that's probably a little bit different to other markets is kind of a much less volatile kind of spikes and in terms of spending and GDP, and I think that kind of plays through is that while we don't see the kind of the significant highs and lows, we've seen continuous sign of much more stable GDP, and kind of it results in us underperforming often when other markets are really kind of running ahead. But at the same time, when other markets really do underperform, we're fairly stable. I think that's what we're seeing here is that South Africans have been scarred in some respects. We've got a fairly high interest rate, and therefore, while you may have expected a much faster kind of recovery, we've seen it just outpace the inflation rate last year. But I think importantly, when you think about the world and where it sits today, that kind of that resilience and that really kind of disciplined approach to managing finances that we're starting to see come through is an important one. And I think that's what we're now observing. An interesting insight is really around what we've observed in rewards, and we've noted that, where over 50% of respondents in the survey say that they are now strongly agreeing that rewards programs are much more important today than they were a year ago. And that's something that we see at a Discovery Bank level. We have over 1 billion Discovery miles being earned and then spent every single month, and clients typically use that on more discretionary areas. So you can see that kind of that supplements almost spend at its core level today, And so I think that's a really interesting insight, and it kind of talks to the headline finding.
Lanesh, you talk a little bit about one of the key themes that stood out is virtual card use, and that has gone from 45% to 73% in just 1 year. I mean, I think of my own phone. I don't default to physical cards anymore, but it's a real problem when I lose my phone.
Absolutely. So, I mean, personally, I'm absolutely happy to see the growth in virtual card. And we've actually seen through the survey that we've run that 57% of consumers are actually choosing virtual card because of the security that it offers them. But I think over and above that, we've actually also seen a shift more towards digitization on both sides of the ecosystem. So on the one side, you have the consumer who's making the payment, and on the other side, you've actually got the ability to accept those payments. So from a consumer perspective, we've obviously seen the growth of virtual card, and digital wallet has actually mirrored growth as well. I mentioned earlier, we see that digital wallets now account for 30% of all transactions face-to-face in stores, and we expect this trend to continuously grow. Through the survey we did, what we've also seen is that 2/3 of all consumers that were surveyed said that they use cash not at all to maybe a few times a month. And key to why they're using the cash is for things like tipping or sometimes transport and taxi. So again, the focus has to be how do you accelerate acceptance at a broad scale so that you're able to accept these digital payments. I think when we look about beyond this, we are, from a Visa perspective, looking at end-to-end digitization of the payment ecosystem. We've just recently started piloting stablecoin-based payments, both on the card as well as the non-card side. And it really gives banks the ability to settle 24/7, also on weekends. And why this is important, again, it comes back to when we look at the entire payments ecosystem, you've got to start by digitizing one, enabling the consumer to make the payment, and how does the customer experience look like for that. And we're seeing consumers, right, very comfortable to tap their watches, their rings, their phones. The second part of it is, I must be able to accept that transaction irrespective of the form factor that consumers are trying to use. And then it goes further downstream into how do we settle and manage liquidity in the overall payment ecosystem. So these are some of the changes that are going to come when we look at overall digitization. And if I could perhaps just add one more point, we also ran a survey probably about 1.5 to 2 years ago to go and discuss with SMEs why, if you are not accepting digital payments, would you accept digital payments? We saw an overwhelming response to that. Probably, again, about 2/3 of all merchants saying, we actually are accepting digital payments. And some of the reasons for that is, one, there's more transparency in the money that's coming into the business. So, there's less mismanagement of funds. Two is the obvious one is security. So not, needing to handle large amounts of cash. And the third one is also to be able to control inventory and stock a lot better when you have digital payments embedded in your business. So these are just some of the changes I think we'll see in the next year and the years to come.
So fuel's an interesting one, and obviously 2025 was favorable from a fuel perspective. We had a favorable dollar-rand exchange rate. The oil price was stable, and obviously not what we're seeing currently. And then a very interesting theme came to the fore when I was looking at these notes, Hilton, and it's something I've been trying to undo with regards to my husband. He goes and he fills up little amounts more often rather than filling a tank at once. And then I see that this is now a trend within consumer behavior. So he was ahead of the trend, but it is incredibly frustrating. So the reality is that it's little amounts of fuel spent more often. Can you talk a bit about what we can expect this ongoing sentiment around potentially a fuel shock that we may face given the volatility that we've seen and the lag effect?
So it's an incredibly interesting insight, and you ask the question why. What makes people fill up more frequently at lower volumes, or vice versa? And behaviorally, the interesting insight is that it is loss aversion. in a declining fuel price, you tend to want to take advantage. So you fill up as little as possible to get you to the next kind of fuel decline, fuel price decrease. And then so that you don't pay the higher rate. That if you think the fuel price is declining over time, you'll fill up more frequently, but less amounts. If the price is going up, you fill up on that Wednesday night or Tuesday night, I'm not sure which day it goes, the price increases, and as much as possible. And that's so that you don't lose the benefit of the lower price. So it's kind of wherever consumers feel the price of fuel is moving, that's how they tend to respond and behave. It's an incredibly kind of interesting behavioral insight that we see coming through. And it talks to how in tune people are in South Africa to the fuel price. It kind of drives so many different behaviors, even though it may not be the primary factor. It kind of it impacts the way that you think about a lot of your kind of day-to-day life. And what we've seen coming through in SpendTrend is an increase in ride hailing, so the kind of the Ubers and Bolts increasing significantly over the period. We've seen an increase in electric vehicles as well, and the kind of charging and the spend in that area relative to petrol vehicles. And I think in the current environment, that's probably a smart decision. Those people are smiling. But I think the kind of a fuel shock impact is a different, that I think has a different impact. It has a ripple effect across the economy in different ways.
Are you bracing for that?
So I think that we certainly are in different ways. As an organization, we feel it immediately with our people. You can see people that have to come into the office every day immediately have a different kind of cost structure at a household level, which is difficult to actually adjust to in a kind of a hyperinflationary area. So I think organizations respond at a level of often allowing more flexibility and staff to work from home to reduce their transport costs. We've introduced a commuter allowance for staff that spend most of their time in the office for a 3-month period to be able to kind of absorb that cost for them. And the government has done the same with the fuel levy. So you can see kind of multiple stakeholders really kind of coming to the fore to be able to manage and absorb the shock that this represents. And I think, beyond a kind of a 90-day period, as we start to look forward, this will be one of the key trends we think for 2026 and how it plays out. So I think the kind of the trend that we saw in 2025 of a reduction in the number of trips, the average kilometers driven, and clients being much more judicious with smaller kind of purchases, but more frequently, we think is going to carry on into 2026 with a very kind of different macro trend that we're starting to observe.
It's not only the smaller purchases in the fuel space, but the small treats that we continue to reward ourselves with, even though there is tighter budget management, those coffees that become an everyday necessity. Talk to me a little, Laneshri, about what this means for retailers as they plan for 2026.
Yeah, so I think for retailers, there is not a single consumer anymore, and we're not going to see that going into 2026. I think that instead of designing for averages, they're actually going to have to design for nuances of preferences. On the one side, when we looked at this particular trend, 57% of consumers that actually responded to this said that they are still protecting the everyday treats. And some of these everyday treats are actually embedded into your habits. Coffee as an example. Once you start getting used to having your morning coffee or however many it is you're having through the day, it becomes ingrained in the habits that you have. So their treats actually it's part of discretionary spend. And so we're seeing, even though we can see consumers that are becoming a lot more deliberate about their everyday spend and managing essentials differently, these small treats are still there. And it's because they think they deserve it, and it's a reward. On the other side of that, there's another 42% of consumers that were surveyed that actually said that they do treat themselves, but they're a lot more deliberate. So what I mean by this is they treat themselves as and when they see the special offers or discounts start to come into play. And this is actually really important for retailers, because it effectively means that I don't just want something that is cheap, or I just don't want something cheaper. I need to have something where I perceive that I'm getting value, but for the exact same amount. So I think we'll start to, or we'll continue to see this type of behavior. What is also interesting is that we see these behaviors pull through in things like Black Friday. In fact, you'll see that consumers are very willing to hold off on purchases until they know these types of events are coming up. So Black Friday now is not just a day event. It's actually become a month event. I don't know if all of you noticed, but like a month before Black Friday, all of the specials start coming in. And as a retailer, if you're looking to only take advantage of the one day, then you've actually lost opportunity that goes on for the entire month. And Black Friday drives 57% increase in sales. Last year it drove a 57% increase in sales. So I think the implication for retailers is that as they start to think about how to serve the South African consumer, firstly, you've got to understand the consumer that still wants the everyday treats and are happy to still pay for it. And then you're also going to have to understand the consumer that values more of the discounts and specials, etc. And then you're going to have to put together propositions that actually cater for both those motivations. So fascinating theme, again, on the treatonomics. But if you think about yourself, there's also certain things that you don't typically compromise on, even as the cost of living is increasing.
Let's talk a bit about travel and trends that you're seeing in that space, given higher airfares. Travel had just recovered from COVID, and then we had the war. Yeah. So where to from here? I suppose is the big question, Hilton.
So when you, I mean, I suppose the kind of the two stories in a sense. The one that we saw play out last year was a continuation of the post-COVID recovery, and we've observed, and we're kind of uniquely positioned in the sense that Discovery Bank clients through Vitality Travel book over 1.2 million flights a year through our platform, and they really kind of use travel as a central feature of the bank, and it's fundamental to how we incentivize clients to manage their money better. Manage your money well, behave in a way that's financially healthy and physically healthy, and you benefit from significantly lower travel prices. So we've seen that come through, and it gives us really good insights. What's interesting is kind of the observation around the price of tickets by day of week, by the month, and in particular by the actual route itself. And so we're able to measure exactly the kind of elasticity in all of those areas. And what we saw over last year domestically is the kind of the price of travel, in particular between Cape Town and Johannesburg and George and Johannesburg, which are the two most expensive flights in the country today. Those increased, and it reflects, I think, a lot of people that are now commuting from the coast inland on almost a weekly basis, and you can see that come through in terms of the Friday morning flight at about 9 a.m. being the most expensive of the week. People returning home of the weekend to the coast, and vice versa on a Monday morning. At Sunday, 5 a.m. flight, 5 to 6 a.m. flights continue to be the cheapest, and that's no surprise across the country. But what I think people underestimate is how widely utilized these kind of corridors are locally. That Joburg Cape Town flight is one of the most well used and kind of frequent flights by number of travelers in the world today. And it kind of talks to the scale of the country, it talks to the scale of commerce between Cape Town and Johannesburg as kind of two hubs that are developing. So I think we continue to see that, and we believe that will carry on. At the same time, I think we've seen a real kind of corridor behavior that takes place more globally in a sense, and that tends to be much more around the calendar. And this year, in this year's report, we actually looked at the differences in the trends of travel by month of year and season of year, and you can see how the kind of the corridors change over the course of the calendar. While the UK corridor remains the biggest, with 20% of travel, what we see is that it shifts dramatically to places like Thailand, to Tanzania, and Mauritius over the year end in December, which become the most popular routes for South Africans, and it kind of highlights the fact that South Africans more and more look for kind of value in their holiday destinations, and so we see those trends coming through strongly over the course of the last month. I think we've seen major disruptions, and there we've seen the kind of the cost of travel increase dramatically, particularly as kind of commuters have rerouted across and around the world, and that's something that I think will be one of the key trends that we continue to see into 2026, is how people kind of reorganize their travel around the kind of the Middle East corridor, which has been so disrupted.
We are going to go to questions shortly. Just one more from my side to Laneshri on the event side. We did start just a little late, so we will have you out by 10:10. And we're going to take, as I said, questions from the floor. There is a roving mic. You can deploy your questions, say where you're from, and obviously Hilton or Laneshri will answer it. The event calendar, because that's the addition that we've referred to repeatedly. How should retailers form their spend, their year around that event calendar?
Sure. So absolutely, this was a new addition this year, and it was really fascinating to see how South Africans are directing their spend, not specifically to products, but around, special celebration days, sporting events, cultural events that are happening. I talked about Black Friday, so I won't go there, but that really drives a lot of the spend. But what we've also seen is in periods of long weekends, we also have quite a significant uplift of spend as compared to other weeks. So in those periods of time, you actually see uplift in refreshments, in retail, and we see the exact same pattern when it comes to sporting events as well. These days, so the celebration, the sporting event, the high discount period, overall, on average, increases spend by 14%, which is actually quite significant. So we also are starting to say that instead of designing as a retailer your special offers and your discounts, etc., around products, you should actually be thinking about the moments, because where the moments around which consumers are choosing to spend are just as important as what they're actually spending on. And this brings together commerce, it brings together marketing, and it brings together the retails in a very collaborative way to plot out for the year. This is the calendar, and these are the types of things that we're going to be mobilizing on. I think that it's important to understand that when you activate, particularly for an event, it's not just the spend at that particular venue, but it's also the travel, it's the accommodation, it's the hospitality. So a lot of opportunity to drive spend there. But again, it's working together with marketing companies, lifestyle companies, and then enabling the payment to happen seamlessly across that as well. So, like I said, I think the implication is going to be around how do you build around moments and not necessarily around the products that you're selling.
Online sport betting, I am deploying that mic to the audience, but we need to get your thoughts and weigh in here. The regulatory debate, the advertising debate, what are you seeing?
I mean, look, we've been, I think, pretty outspoken in terms of just the fact that we think that at a societal level there should be controls. And particularly when you think about the kind of the advertising marketing risk, particularly to underage people, and the kind of the risk that represents in the long term. There's also financial crime risk in terms of the kind of the need to KYC and to ensure that sports betting itself is responsible, and the rails that are created are used appropriately. But I think for us as a kind of behavioral bank, what's important is to understand the kind of the financial health of our clients, and how they're using and thinking about sports betting, given the potential for risk. And I think that we're fortunate in that we're able to have a fairly holistic view of our clients, and we see that the majority of them today in our segment are using the sites and the applications in a fairly responsible way, predominantly around the major sports events themselves. They're setting more and more a budget and sticking to it, and they're using it for entertainment. So I think the vast majority sports betting today is now online, and we've seen that come through in the kind of underlying data itself. And the vast majority of the participants in our survey and in the kind of Discovery Bank base are managing their finances overall in a very healthy way, and in fact are shifting some of their other entertainment spend into sports betting. They're kind of bringing the two together, sports events themselves and then the betting site. So I think it's an area that we are kind of very, very sensitive to, in the sense of the potential for real societal risk, and therefore I think we've been, I think, very clear that there should be responsible regulation in place to protect the kind of the broader risks. But for us, it's also important to then be able to guide individual clients, and if necessary, and this is something that we are more and more starting to do, is actually put guardrails in place at an individual client level based on their financial health and their behaviors. And I think that's important as an organization to be able to actually do that and monitor and take the necessary action with our clients.
Questions from the floor? Go ahead. Let's get one there, and then go. Aki, you can start there. Go ahead.
Good morning. It's Aki. How are you guys doing? Well done. Interesting survey. Hilton, I just want to touch on the online gambling that you mentioned, and also from a Visa point of view, I think that if you look at the trends over the last 3 years, it's growing exponentially. It's really becoming a problem. And I do think we, as a society, are underplaying it. We talk about 1.5 trillion, and that's been disputed because they say that's bets placed. But I've never seen people talk about the massive amounts of winning. So I think that whatever you win goes back in. At which point do you see this impacting? And I guess it doesn't really affect Visa or Discovery because it's a transaction. So you're still earning the income, right? But you must be seeing trends on where people are spending less on because of how much they're spending on online gambling. And then my other question, Hilton, is it true that Discovery Bank is planning to refund card holders who have placed bets on Arsenal during the season?
I can neither confirm or deny that rumor, but we do sympathise with them.
I'm sure you do. I'm sure
no, maybe I'll take that question. I think that the trend is certainly increased, and that's been the cause for concern. I think, like 100%. And to make the kind of the statement that we benefit as a bank from spend is not true, actually. I think that the responsible spend is important as a bank, but as a bank that's built on financial health and incentivizing clients to be financially healthy, this is very much core to where we see our role and responsibility. And that's why I say, we are monitoring our clients at an individual level, looking at their financial behavior, their financial health, in particular debt management, and then correlating that back to their behavior in areas like sports betting and other unhealthy behaviors that we would observe. And I think that while often as a country we rely on regulation, and that's important, and we believe that there should be regulation, particularly kind of where you have second order effects around marketing to minors and kind of just the accessibility of online sports betting. We think that there should be really strong regulation. If you think about it, the kind of the KYC process that you have to go through to open a bank account is onerous and it's rigorous, and it ensures that the person that's actually managing that account is who they say they are. You should think about sports betting accounts and other similar digital wallets in exactly the same way. So we think that there is a need to regulate responsibly and to ensure that the kind of risky behavior is minimized. And I think that as a kind of society, that's important. And as a bank, we've got an obligation, and it's something we take seriously. So we actually believe that it's important to monitor and to observe and to guide and educate clients, and if necessary, to put in place solid guardrails to protect them.
Thank you, Hilton. Go ahead.
What percentage of Discovery card holders settle their credit card in full at the end of each month? And obviously, depending on the economic time, it obviously differs. But what is that number at the moment, out of interest?
In our case, it's actually the majority. So the majority of our clients settle in full. every single month. It does vary by time of year and obviously the cycle. But I mean, that's kind of where we see responsible use of a credit card, and a credit card being interest-free is probably the best way to spend if you're managing your finances and you're budgeting well. And that's why we actually show the kind of the correlation between spend and clients who budget on an ongoing basis and have their financial planning in place. And you see that the kind of the correlation is direct. Those that plan have much better outcomes.
Thank
so
you,
it's
Hilton.
very possible.
Go ahead.
Hi, Janice from Bloomberg. I've got two questions that seem very obvious, but to eliminate the risk of assumption. When we're talking about the weight loss medicine effects on adjacent spending, that 38% that say they're spending less on groceries or food overall, is the read-through there that they're eating less?
Yes.
Okay.
I think so. That's the inference. Absolutely. That kind of it's weight management at a holistic level.
Right. And then the other one was just when I'm looking at most popular in-store grocery retailers and online spending, the graphics here are showing the retailers in a certain order.
Alphabetical.
Is it alphabetical? Okay,
Yes.
Because back on page 21, the basket also had a very specific retailer on their no-name brand goods, and I was wondering if that was implying that amongst your customers' spend was predominantly amongst that retailer.
I need to check and we'll maybe chat afterwards on page 31. Nanesh, you might know the pages off by heart. But the retailers are generally in alphabetical order.
Yeah.
Okay, thanks.
That's been provided.
Thank you.
Great, I've got a question at the back of the room there, please. Thank you.
Thank you for an insightful discussion. My name is Sibahle from IT Web. I'm particularly interested in ride-hailing gaining momentum. What are some of the factors that contribute to this? Are these riders perhaps car owners who are now ditching their vehicles and as a result of the increasing petrol, or are they normal commuters?
You want to go
I'm
first,
happy
yeah.
to comment and then Nanesh. No, I think that what we're seeing is just a general trend to, as kind of ride-hailing has become more ubiquitous, the kind of the trade-offs and the cost-benefit of owning a car is often being kind of traded off against or balanced against ride-hailing, and we see that they're very, very cost-effective solutions today. So that we think is shifting. It's also at different age demographics, younger commuters choosing to use ride-hailing services as opposed to owning a vehicle, and it also comes back to affordability. You know, the fact the kind of the economics of ride-hailing versus the kind of the debt that's incurred often with the vehicle ownership. So we see a number of different trends that would be driving that. But I think the trend that we're able to measure quantitatively through the spend trend is kind of the actual underlying shift that's occurred, and that's what you're seeing play through there.
Yeah, I think from my side, so remember from a Visa perspective, we see the transactional data. So to go back to Hilton's point, we can see the shift. We've seen through different surveys and, different information in the environment, especially the younger generation, the trade-offs they are making is ownership versus access to, getting from point A to B. It also speaks to the consumer that's actually making very deliberate decisions of where to spend their money. And if you look at the availability that we have in South Africa to use the ride-hailing systems, I think for certain segments, it just makes sense. Instead of buying a car, you would actually use the ride-hailing system.
Any other questions from the floor? We've got one here and one there, and those are the last two questions we'll take for the session. Thank you very much. Go ahead.
Hi, my name is Ivio. I'm from the Debrief Network. So I wanted to ask, so obviously we've mentioned a bit about how there's a lot of tension happening in the Middle East. That's obviously affecting travel, which is first and foremost the major thing, international travel especially, but also domestic travel as fuel prices go up as a result. what do you think? I mean, there's the obvious things like the inflation going up, etc. But what do you project throughout the year may affect, as a result of all of these things happening, will be affected in terms of decreased spending in certain sectors from consumers?
So I think, yeah.
You're going to weigh in and then maybe Linesh.
Yes,
Do you want to go first?
Yeah, so I think if we look, I'm going to start by saying that we know that we are operating in a period of uncertainty, volatility from a fuel price perspective, also global trade tensions, etc. If we look at payments history, what it does tell us is that in times of uncertainty is where innovation actually thrives. If you look at 2020, the COVID pandemic as well, households and businesses very quickly started adopting things like digital payments, e-commerce, etc. And we saw digital payments grow probably faster than it would have grown if that didn't happen. Where I'm going with this is, I think you'll start to see a lot more innovation, and you'll also start to see consumers being a lot more deliberate. Hilton mentioned that consumers are going into 2026 with a lot more tools and a lot more of stronger financial behavior. So you will start to see the trade-off. I also think AI is going to play an increasing role. We talk very briefly, or I talk very briefly about AI, but currently people are using it to make comparisons between where things are cheaper and how do I buy, because people are looking for that value. I think you'll start to see it happen a lot more. So I think that through 2026, even though it's, it is uncertain and we do expect volatility, I think you'll start to see a consumer that will continue to be resilient and really manage where their spend goes and what they do.
There's no doubt that kind of we are in uncertain times, but as South Africans, we tend to respond in very, very positive, resilient ways and innovative ways to these kind of global trends, and that's what we see coming through. So increased use of incentives, rewards, more judicious spend, and the tools for financial planning and budgeting we think are absolutely crucial.
Hilton Kana, thank you so much. Linesh, we really appreciate your time. Thank you so much for joining us for the SpendTrend 2026. Thank you.